Yes, this is Real Turkey Channel, and I'm your usual presenter, Attila Yeşilada, who can't get out of his home to find other presenters and interesting people to interview because the damn country is full of COVID-19 virus, and I already have very weak lungs. My last video about Turkey's defense in Eastern Mediterranean has made me a lot of new enemies. I shall not visit certain countries. Today I'm moving on to less controversial subjects, which is Moody's midnight assault on Turkish integrity and national unity. I don't know how it is in other countries, but Turkey takes these credit rating announcements, in this case a downgrade, extremely seriously. Our administration, and I believe a lot of the Turkish people, consider these downgrades as the making of an international conspiracy, which we call the Ubermind, to undermine Turkish economy and morale. Now, I've been reading Moody's, Fitch, and S&P reports for 30 years. I don't agree with them on most matters, economic or political. But are they biased? Do they hold a particular grudge against Turkey? I seriously doubt it. Why would they bother? I mean, if they are pawns of American imperialism, you would expect them to continuously downgrade Russia and China and other American enemies, but not Turkey. Anyhow, I just laugh. Our president had said just when Turkey was taking off on its way to become the star of the Middle East or the world, Western powers staged one of their usual tricks again. And he said, no matter what the credit grades say, our economy is improving and we shall move on rapidly on the chosen trajectory. Poor translation, but some of the stuff just makes so little sense. And I read the reports in Turkish financial press and among research institutions today. The general commentaries, Turkish financial assets are already trading so far below the assigned credit ratings that doesn't matter. It's just, don't bother about it. I completely disagree with this viewpoint, and this is why I'm shooting this video. I think Moody's unexpected downgrade, which reduces Turkey to the junk of the junkest, I believe, one or two notches above default, is full of extremely candid and frightening warnings to all investors, to everyone who does business in Turkey. Its timing is particularly nasty because after Fed's policy change, money, that is funds, are looking for high yield opportunities, and because of the exodus of foreign financial investors, Turkey's yields, both in TL denominated bonds, swaps, as well as in euro bonds, are outrageously high. To give an example, I think Turkish Treasury's 30-year euro bond yields something like 600 basis points above equivalent maturity American government bond. And I think it is it trades 150 basis points wider than the emerging markets benchmark for an equivalent maturity. So to me, not all the investors, but some brave hearts were looking for opportunities to get into Turkey, and the first damage of Moody's midnight assault is that this people will think again. How frightening are the remarks? 4 main points. A, balance of payments crises. As I've said, I've read a lot of these reports. I've never seen this possibility being mentioned so prominently and so without conditionality. Turkey is heading for a balance of payments crisis. 2, expressed politely, but essentially guys, your government doesn't have a clue on what the hell is going on. It lives in a dream world, which in the official report goes as the reaction function of the government has been non-existent or weak. And three, and in my viewpoint, the most realistic and imminent danger is that you have no fiscal space left. The very low budget deficits of the Turkish government has been the anchor of Turkish economic and financial stability. We have lost that anchor, and Moody's says that it's going to get worse. And I agree with all of these viewpoints. So how will it affect the markets, and why don't we see it in a day or two? I mean, up 6-7 years ago, Turkey used to receive $30-40 billion of foreign financial capital, or hot money. And then, of course, these credit grade changes would have made a huge difference, because there was so much money in Turkey. Since the beginning of this year, foreign investors have pulled out $15 billion out of Turkey. The same thing happened in most emerging markets during the zenith of the pandemic, that is in March and April. But since then, hot money has been returning to the rest of the emerging markets, but not to Turkey. In other words, there is very little footloose money left in Turkey to be worried about Moody's. The impact is going to be more sinister and long-term, in the sense that when the Turkish Treasury needs to issue another Eurobond, the arrangers or the lead investment banks that market these bonds would say, well, after Moody's report, you'll have to pay higher interest rates. The same thing will apply to our banks and prime corporates, who also issue a fairly good amount of Eurobonds to cover their financing and investment needs. And I think all of these institutions will have to pay higher interest rates or postpone their borrowing plans, which is what I think Moody's talks about when it calls a balance of payments crisis in the making. Turkey's current account deficit is expected to reach $26 billion at the end of the year, or roughly 4% or so, more than 4%, 4.5% of GDP. And financing that is going to be extremely difficult. After the Moody's decision, it's going to be even more difficult. Despite having said these, I don't expect a balance of payments crisis in Turkey, at least for the next 6 months, possibly for 12 months, because Turks have immense amount of FX deposits in banks, which are actually at the disposal of our central bank to make foreign debt payments or to lend to banks that need to make foreign debt payments. Two, Turkish banks have solid credit lines as well as encashable assets abroad, roughly $25-30 billion. And Turkey's foreign debt redemption schedule, at least until the end of the year, is not very onerous. So, no balance of payments crisis this year, but constant pressure on the Turkish lira. That is, in most likely scenarios, Turkish lira will continue to depreciate unless central bank raises the policy rate by at least 300-400 basis points. The only way Turkey could have a balance of payments crisis is a Biden presidency and then the imposition of Katsa-like sanctions on Turkey, which always have a severe effect on our ability to finance ourselves, as well as creating the conditions for a bank run at home. EU will impose sanctions on Turkey at the end of the month, but they are going to be symbolic. There is really no appetite among EU members to punish Turkey severely for Eastern Mediterranean transgressions, alleged transgressions. You can see my latest video. Read the commentary. It's really exciting. Most of it negative. To me, the main problem is budget financing. Turkish cash budget performed outstandingly well in August, generated some $1 billion of total surpluses and a smaller amount of primary surplus. I'm really not after numbers, people. I mean, if you want numbers, you're at the wrong channel. I'm trying to give the big picture. Uh, but suddenly, the conditions have changed rapidly, and between September and until a vaccine is found and brought to Turkey, I expect the budget deficits to expand exponentially. Let me explain why. And I should shoot a video about that. We see a significant slowdown in economic activity by the end of August, which continues into September. Two, I think I am the only one on this planet who outed Turkey's health crises. The COVID-19 outbreak is much, much bigger than the official tally will tell you. We may have 10,000 or more new patients rather than the 1,600 officially announced by the Ministry of Health. That, of course, judging from the experience of other countries, leads to voluntary lockdowns by people like me. I'm not going to leave my home until next summer, to be perfectly honest with you. And I'm sure a lot of people are going to behave like me. More importantly, even though the government denies the magnitude of the COVID-19 outbreak, it's already taken measures. Senior citizens, those older than 65, are severely restricted in terms of their ability to leave their homes. Weddings, engagement parties, stag parties, parties in general, and indoor and outdoor cultural events have been banned in most cities. Now there are plans to bring back nationwide or province-wide lockdowns, either for an extended period or at least for weekends. Most universities will not open. They will move to virtual education, which means anyone who sells to students, like the stationery sector, etc., is going to be in deep trouble. As well, Turkey's unemployment, the actual unemployment, including discouraged workers, is probably 25% of the workforce. Just as the situation began to improve, COVID-19 struck again, which means a lot of the people who are unemployed by August shall remain so for at least 6 months or so. Even though Turkey pays only a trifle to unemployed workers in terms of welfare or social assistance, it is still extra spending in the budget. And VAT and special consumption taxes were deferred in April. They're coming due in October. The business community simply doesn't have the cash flow to pay those, so they'll have to be deferred again. So the Treasury will collect less revenues than projected, and will have to increase spending in terms of welfare, healthcare, and in an issue unrelated to COVID-19, military expenditures, because our entire fleet is patrolling Eastern Mediterranean. As a result of this, we expect budget deficits to reach 5% of GDP. I've seen higher estimates. Next year it's not going to be better. Probably budget deficits to GDP ratio will surpass 6%. And that's like 5% of Turkish GDP is roughly $35 billion. So that will have to be financed. And the fact that after Moody's downgrade, foreign financing is going to be more expensive, probably too expensive for the taste of the Treasury. The Treasury will have to borrow abroad. So far, that didn't cause any big problems in terms of rising Treasury bond yields, simply because, like many other emerging market central banks, our central banks printed money at will. But now, with Turkish currency, the exchange rate trading around 750 to $1, and currency depreciation immediately leaking through to inflation and corporate balance sheets, central bank had to limit money printing, which means the Treasury will not be able to borrow from the central bank. It will have to go to the other buyers, which in Turkey's case are commercial banks. But commercial banks have been forced, or let's say job-owned, into lending to anyone who walks through the branch door. So their liquidity buffers have been eroded. Of course, Treasury always sells paper, but the interest rate it will have to pay on these bonds will have to increase substantially and progressively. I think at the end of the year, the 2-year bond yield, which is currently around 13%, is going to rise to 15%. The Treasury says it's going to start reissuing 5-year and 10-year bonds in TL denomination, and those will probably have to be priced to yield 16 to 17% for the Treasury to be able to borrow sufficient quantities to patch up its budget deficit. And of course, the duration of sovereign debt is 30 months, and most of it is indexed to the CPI or to the short-term interest rate, which means next year financing expenditures in the budget are going to increase substantially, which means less money for education, health, infrastructure, and welfare. So, in my view, Moody's mid-nite assault was really a harsh blow to Turkey's aspirations of rapid economic recovery, and it probably won't get any better until a vaccine is found or somehow the world sorts out this COVID-19 menace. This has been Atilla Yeşilada presenting for Real Turkey channel. Allow me to show you our new English language website, and you can probably imagine what kind of articles are posted there, but it's updated every day, not only with English language news from Turkish politics, economy, and business, but also select articles from the emerging markets world. Wherever you are on this planet or in this solar system, please stay healthy. Atilla Yeşilada saying goodbye from Istanbul.